Good morning, traders. It is the first trading day of the month, December 1st. We're about 2 hours into trading. Sorry I haven't been able to get my videos out. We had holidays in between, light market volume, not great trading conditions. So let's start with our last pick, Cisco. It was a nice one. There's the price action from November 18th. I love this breakout through horizontal resistance after earnings, also through the 200-day moving average. We were going to be leaning on that 200-day moving average and selling a bullish put spread below it. We're going to be selling the December 9th expiration, the 46 puts, and buying the 45 puts, and we're going to be doing that for a 20-cent credit. That spread is in great shape right now. Should be a 25% winner. You can see how Cisco has continued to float higher. In that video, I also mentioned seasonal strength and the fact that you do not want to short the market in November and December just for that fact alone. You've got a ton of cash on the sidelines. Asset managers are going to be deploying some of it. Corporate buybacks are currently at a pace of $10 billion per day. So you have that also supporting the market. Let's take a look at the price action in the market, though. It's less than ideal. So just to recap, Cisco, really nice trade. Pete, look at the stock moved higher. Why didn't you just go buy some calls? Because I didn't know if the market was going to continue to push higher or not. We had that really big spike up November 10th on the light CPI number, but we didn't have any follow through. We have to have follow through. We had a really big spike up yesterday. No follow through today. So let's go into the S&P chart and see what the heck is going on here. Here's our S&P 500 chart. You can see nice big decline right in here. And now the market is struggling to recover. So we are not seeing any kind of really nice follow through. Why? Well, and what are we looking for? And why the heck did we rally yesterday? Look at this rally yesterday. This is a 5-minute chart of the S&P 500. And you can see how Jerome Powell spoke right in here at the Brookings Institute. The market was waiting for some news, and the reaction was positive. Well, what exactly did he say that would spark this kind of excitement? Well, he said that, hey, we're going to be reducing the pace of our tightening, perhaps as soon as December. That's not news. The market's looking for a 50 basis point rate hike. 50 basis points is less than 75 basis points, which we've seen during the last 4 FOMC meetings. Right now, the market is pricing in a 25 basis point rate hike in January and another one in February. 25 basis points is less than 75 basis points. This information is already in the marketplace. This is nothing new. So, what could possibly cause this kind of a rally? Short covering. Institutions were caught short. They were looking for another repeat of Powell's speech in Jackson Hole in August, during which he said, we are going to tighten, 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 tighten. We don't care if it crashes the economy. We have to rein in inflation. That is priority number one. So everybody's ready for hawkish statements from the Fed, and they position themselves accordingly. When the market reaction is bullish, they've got to buy, 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 buy. Oh my gosh, these positions are moving against them. You got a breakout through a horizontal resistance level. You have a breakout through the 200-day moving average. So let's put that up so you can see where it comes into play. The 100 days also important because you can see how this was the November 10th rally, and that's the follow through. Well, if this was exciting buyers, and if they felt that conditions had changed materially, you would see stack green candle, stack green candle, stack green candle, stack green candle, test that 200-day moving average right away on heavy volume. Instead, what happened? we go into a sideways compression on extremely light volume. So what? So what? So what? That tells us that asset managers do not feel that this is their last chance to buy because there's going to be a massive year-end rally. They're like, yeah, so what? Okay, inflation came in a little bit lighter than everybody was expecting. Yeah, some shorts got squeezed because they were looking for another drop, perhaps down to the low of the year. They didn't get it, so they had to cover. But just this short covering in here, I'm not buying it. I'm not interested. Okay, well, here we go again. So now Powell comes out and says, oh, yeah, we're going to be reducing the rate of tightening. And you get this big liftoff. Why? Because traders were positioned for a breakdown below this 100-day moving average, and that could have gained traction on the downside. When instead, the market was in rally mode, they were forced to cover. So what would we expect today? If this was material news, as I explained earlier, you would see boom, 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 big stacked green candles. All of a sudden, asset managers have awakened. This is time to buy. Fed is going to stop raising rates. They might even ease. Inflation is pulling back. That would prompt them to do something like that. But that's not what we heard. It's not what we heard at all. They're going to continue to tighten. So now all of a sudden, you're not getting the follow through buying that we would like to see. So this morning, you've got a lot of bullish speculators who are all hot and bothered. Let's zoom out for a second and go into a weekly chart. Always good for us to take a longer term perspective. And if we do that, you're going to see a downward sloping trend line. And we can draw it in right here from this high right here and right through that. And you're going to go, oh, hey, look, 1, 2, 3, 4, 5 touches. That is a valid trend line on a weekly basis. Where are we right now? We are right on it. Yes, this would be a significant breakout if it were to happen right now. But in order for that to happen, we would have to see boom, 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 go, go, buying like there is no tomorrow. We're not seeing that at all. In fact, the volume is starting to dry up. So let's take a look. And there you've got a retracement almost instantly. Now, this morning, I posted an article on Reddit. Real Day Trading is the Reddit sub that I like to post to, and I put that out before the open. And I went back and I referenced what happened on November 10th because I thought a lot of traders are going to come in today. They're going to be all hot and bothered by this big move yesterday and the breakout. So I want to temper the excitement and I want to look back to a similar situation so that they can understand what's likely to happen. In that article, I had mentioned that we had this November 10th breakout. That was the CPI rally and we were in go-go mode the entire day. That was a 200-point S&P 500 rally. So what happens the next day? You have people who turn on their screens and they are ready to buy. Oh my God, I can't miss this move. We just got through the horizontal resistance level. We got through the downward sloping D1 trend line. We got above the 100-day moving average. Hey, it's go-go time, right? So they come in the next morning, bye bye bye, bye bye bye, bye bye bye. Oh, this looks great. Look at this thing grind higher. I knew this was going to be a nice breakout. Uh oh. Uh-oh. Maybe there's some profit taking. Maybe I got into this too early. Oh no, maybe they'll sell it all the way off. Probably get some bearish speculators in here as well. And you get this pullback. This flushes out these early buyers. My point this morning was there is no hurry. This is not the last train out of town. We had a bearish 10P cross right here at the beginning of the day. So you should be telling yourself, why don't I wait to see what this bearish cycle brings. This is a proprietary indicator unique to OneOption. It's all I use to trade the S&P 500. It's also very valuable for trading individual stocks. So you get this pullback in here. Okay, we preserved the close from the previous day. Nice temporary little pullback, only lasted 4 bars, flushes out some of the eager beavers that were in there early in the day, and now we start to march higher. We've got our bullish cross right in here, heavy buying the previous day, major technical breakouts. This is where you want to be buying. Now you've had an hour worth of market action so that you can evaluate what the hell is going on. We have still decent strength, very minor pullback, nothing organized in here. This is where you can start evaluating your stocks with relative strength, because on the early move higher, everything is going to be in rally mode and you can't separate out the real deal from the fakes. But when you get a pullback like this and the stock stays on its high of the day, you know it's the real deal because you're looking for technical breakouts and heavy volume. That's what we trade. And when those stocks maintain their high of the day on a little market dip like this, you know that when the market regains its footing and you got your bullish cycle starting, now is when you can go in and buy those really strong stocks. If by chance you're wrong and the market continues to go lower and you make a new low of the day, you'll be able to exit those stocks, oftentimes for a profit, easily a scratch, maybe a tiny loss, but you know that the strength is there, that institutions are in there buying because it held its strength during a market dip like that. That's why it's so important to wait to see how the opening plays out. In this instance, yeah, we got a nice grind higher, but then what happened? A whole lot of nothing, because the market went into a sideways compression. You get some selling in here. Look at the volume, absolutely dry up. So as I'd mentioned on that November 10th breakout on that CPI number, if buyers truly felt that this was material news, you would not have seen drops like this. Boom, 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 boom. Higher, 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 higher on big volume. So breakouts alone are not enough to get us to trade. They don't constitute a good trading opportunity. It's the follow through. The breakout gets it on our radar. The follow through is what we make money on. So follow through is critically, critically important. So let's fast forward what's happening today. Now all of a sudden you can see we had this gap up, long red candle. Ooh, nasty. We've got this bearish 1OP cross right in here, little upward sloping trend line right in here. Yes, this could be a nice shorting opportunity. Let's go into that 5-minute chart. Let's take a look at what happened on the open, because we had bullish speculators gobbling this up early, and this is what I warned. This is pretty decent. These are stacked red candles. Where did the buyers go? Where did all of these buyers go? If this was a legitimate rally, where are they? Ah, heck, let's put on a small little position here. We can put on a one lot, right? I'm just going to do an MES. That way we'll be able to track it. And let's see if we can get filled on it and put it out there. All right, so I have a tiny position right now, and we're going to continue to track it and see what happens. 40.71 was the short. We've got a bearish 1OP cross here. We have the market drifting lower. I'm not even going to think twice about this position, but I think this is going to set up a good shorting opportunity because this was organized and we didn't get a bounce. Unlike the chart that I showed you on November 11th, we did not continue higher. We've got that major weekly downward sloping trend line that I showed you. That's big time resistance. We have the 200-day moving average. Could we go down and test the 200-day moving average? It's roughly at 404. We're at 406. Sure, 20-point sell-off in the market. Very, very possible. And right now you're starting to see the market come in a little bit. So Am I worried about this longer term? Is this going to be a buying climax? Is the rug going to get pulled out from underneath us? No, I don't think that's going to happen because we're in year-end mode. Could some of these gains be stripped away? Absolutely. And then we get back into a narrow trading range between the 100-day and the 200-day moving average. So we try and poke through, don't quite make it, float back into this tight compression right in here between these two major moving averages. Is that a possible scenario? You betcha. Do I short in November and December on a longer term swing basis? No, I do not. And that's really what I'm looking to do right now is I'd like to put on some positions that will take advantage of this tight sideways compression into year end, knowing that there still should be some buying on seasonal strength. So I'm going to be looking for stocks that are relatively strong. I'm going to be expecting that there are going to be some market wiggle and jiggles in there. And this 200-day moving average, if it fails, I don't mind that we test this horizontal resistance, which is the halfway point of this long green candle. I don't even mind that we test the bottom of that candle because it's still above the 100-day moving average. And my thesis is we stay right in here, continue the light volume pattern. I'm not looking for the rug to get pulled out from under me here. Yes, we've got a little bit of easing in inflation, and yes, the Fed is softening their tone a little bit. I am not in go-go gangbuster mode where we're going to be breaking through that major downward sloping trend line into year end. I don't see that happening either. So I'm fairly market neutral in here. I'm just looking for a good bullish stock to buy. So ideally, we've got something to pick from that's got momentum and maybe even a good earnings report recently. So I'm going to go in and I'm going to look through strong after earnings. This is a search where the stock gapped higher after posting earnings announcement. That earnings announcement has come out in the last couple of weeks. So the stock is still above that opening price where the stock was after the earnings announcement, and that's why we consider it to be strong after earnings, which, by the way, how many times have you looked at the initial reaction to an earnings report and thought, gosh, I thought that was a pretty good number, and look at that stock sell off? And then you find out that a day or two later, the stock actually rebounded, and that was a good buying opportunity, but it has since fallen off of your radar. Well, this search helps keep those stocks on our radar. So I'm going to take a look through some of these, and this is the daily chart. This is the 5-minute chart. So I'm going to take these major moving averages off since I don't use them on a 5-minute chart. We'll just clear those out so we can get a good clean look at what's going on. And let's take a look. GPS, just looking at those daily charts. This is nice, getting a little toppy in here. This is a nice breakout. This stock should pull back. This is Gap Stores. Any kind of pullback in here might set up a good opportunity. So what do? I'd be interested if the stock were able to take out this support because then I might have a bullish put spread that I can sell below that 1240 level, which is where the earnings announcement came out. But right now, nah, I'm not too interested. Retailers in general, they've had a nice little rally into year end, but they are volatile and they could pull back if holiday shopping is light. This is kind of nice. Dell's trying to get through that horizontal resistance and through the 200-day moving average. Not bad. Let's keep looking. Best Buy. I like this. I like this a lot because you can see how the stock's continuing to move higher even when the market is pulling back a bit today. Really nice relative strength. You can see it's a choppy one, making its way higher when the market is pulling back. There's another way we can view that, and I can simply put up an overlay of the SPY. So I'm going to do that right now. It is the gray line. Market down, down, down. Best Buy up, up, up. Okay, nice. That's nice. This stock is doing well. Look at this recent move right in here. barely flinched, okay? From there, stock is higher. From this point, market down, stock up. Relative strength. There's another way that I can see this. I put up the 10SI. Orange line above zero means that the stock is strong relative to the market. Okay, cool. So I know institutions are out there buying because the market has pulled back, but the stock is moving higher. These institutions want a position in Best Buy. They don't care that the S&P 500 is down a little bit right now. They're looking at a longer term position in the stock and they like it. That's what gives me the confidence to sell an out of the money bullish put spread. Where would I like to sell it? Well, we've got the 200-day moving average coming into play roughly at about $80. So for me to sell an $80 put and buy a farther out of the money put makes sense to me. So I'm going to bring up the option chart, and here we can see there's the $80 put. The expiration is December 23rd, just before Christmas. Yes, holiday shopping should keep buyers of this stock engaged. And we would be selling the $80 put and buying the $78 put. And right now that spread is 30 cents bid, offered at 46 cents. Since there is a $2 difference in the strike prices, I would like to receive a 20-cent credit, excuse me, a 40-cent credit for this spread. I have to put up $2, subtract 40, because that's the credit I received. My net margin requirement is $1.60. I'm bringing in 40 cents. 40 cents divided by 160 is 25% return in a matter of 3 weeks. That'll buy some nice Christmas presents for you. I like this. I think this is a really good play. Now, can you get that spread done right now? No, but the market's pulling back a little bit. There's a good chance that we will be able to get that 40 cents. We're pretty close to it right now, and we won't need much of a pullback in the stock. So yeah, I like that. That is going to be your pick of the day. So I'm going to take this down and I am going to highlight a couple of other stocks. We'll see what they're doing. DE, really nice breakout post earnings. Look at that compression up here. It's just digesting some gains, but yes, it does look like it wants to go higher. If I have a chance to sell an out of the money bullish put spread on a pullback, I'm going to signal that low right there because it's still above the opening gap. Yeah, I'd be interested. I want to start looking at the stock if this happens. I'm going to continue to go through TIGR. Nice little bullish flag formation right in there. Chinese stocks have been red hot. Breakout there through horizontal resistance. Why wouldn't I consider these Chinese stocks a good buy right now? I would from a day trading standpoint because we're seeing a major short squeeze on Chinese stocks. They are rebounding, but China's PMIs came out this week. They are very, very weak. They're still in their zero COVID policy. I see China as a weak link. So I don't trust anything that I see there. In fact, I'm waiting for a good shorting opportunity to set up in FXI. Those are the 25 largest Chinese stocks. So you can day trade these. This is a short covering bounce PDD, one of the better Chinese stocks. I would keep it very short term on these. BILI, also Chinese stock. HPE, Hewlett Packard. I like this one. I love this breakout right in here, but the options liquidity is lacking, well, mainly in terms of option implied volatility. So you can't get much of a credit, but I'd like to see half of this long green candle preserved, which it has been able to do that. Yes, I would be interested in buying this stock, but not right here, right now. I'm looking to do an out of the money bullish put spread. I can't get any premium for it, so I'm not overly anxious with this one. I do like this breakout. I do like that price action. WDAY, downward sloping trend line, breach to the upside, 100 day to lean on, some kind of choppy price action in here. Not my favorite. Sell it below the 100 day. I'm not overly crazy about that. I like BBY much better. BEKE, this is a retailer, so you can see a nice little breakout there. And XPEV, this is a bottom fisher. You can see big drop there. Earnings before the open. No follow through here. Nah, I'm not interested. This is not the type of stock that I'm going to be interested in doing anything more than day trading. So no, that one's not going to qualify. So that's kind of what I see unfolding in here. Let's take one look at the market and see what the S&P 500 is doing on a 5-minute basis. And let's see if we're continuing to drift lower or not. You can see how we're on the low right here. And yes, my position is making a little bit of money right now. What do I see unfolding the rest of the day? What do I see unfolding the rest of the year? I've kind of told you how I think we're going to be stuck between the 100-day and the 200-day moving average. I believe that downward sloping trend line on a weekly chart is going to stay intact, and I think that it's going to be a great big nothing burger between now and the end of the year. Sorry about that news because I like lots of volatility. I like lots of movement. I just don't believe that we're going to get it. And that's one more snapshot that you've got here. If the market can't get going in the next few weeks here, if we don't see a year-end rally, I do think that that bodes poorly for the first quarter of next year. And this, you can see this rally here, that's low quality stuff. I mean, we are not stacking green candles that would indicate a huge appetite for stocks. Instead, everything is retraced. There's lots of overlap, very chunky price movement, very low volume in here. This is not typically what you'd want to see for a year-end rally. So the fact that we can barely get off the deck here, we finish right in here between those major moving averages going into year-end, and I think that that is going to set up possibly some selling. So that's where I'm expecting us to compress between these two moving averages. We get this upward sloping trend line right here, breach to the downside. I think we could see further selling. So I'm going to click on that because I'm going to set my alert, and I'm going to click on that. And there's my alert line. When we break through that, we're through the 100-day moving average. Then I think we've got more selling pressure coming in January. Ultimately, I think the market finds support sometime in the first quarter of 2023. I think that most of the bad news is behind us, and I believe that a soft landing is possible because the jobs numbers have been good. Initial jobless claims have been coming in around 220,000 per week. That is a low number on a relative basis. That means that tomorrow's unemployment report probably going to be pretty good. So that's good news. People have jobs. That is good news. I think that if we had a horrible number and people were starting to get laid off, I think that actually would weigh on the market because until we see that weakness in economic growth, everyone's kind of erring on the side of this could be a soft landing, and the Fed is through the majority of their tightening cycle. So maybe we get through all this, but economic numbers start to deteriorate. Everybody starts to get worried, and the market sends the Fed a message in the form of a market sell off. Hey, Fed officials, you paying attention here? Economy's starting to falter. You guys need to take your foot off the brake. I think that's very possible in the first quarter of 2023. For right now, let's take advantage of some time premium decay. Let's take advantage of seasonal strength and the notion that we are going to be trapped between these two major moving averages for a few weeks, and that Best Buy is going to benefit from some holiday sales and some buyers sell that out of the money bullish put spread. That's all I've got for you today. I know there's a lot of information out there, trying to do as many of these videos as I can, but if we do get trapped in this range like this, I don't know that I'm going to be doing more videos because there's just nothing for me to report on. So Please be safe during the holiday season. If I see something I really like, I'm going to do a video, perhaps even next week. Thank you. Please leave your comments. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.